There, we found our guest. He's here.
Mike, how are you?
Good.
He's eating breakfast while he's waiting for us.
I like it. I like it.
So, for the uninitiated, this is Brandon Box, Cogent Bank. Brandon, tell us what it's like to be a banker.
We do what our title company clients tell us to
Yeah,
do,
right.
try to
Yeah.
make their life as easy as possible. But no, it's one of the best jobs in the world. Get to work with small businesses, big businesses every day, figure out how to help them continue to be more and more successful.
That. So I'll give my perspective. You've heard kind of what I feel about banking and kind of where the difference is. But Mike, you were a banker back in the day.
I
What is
loved it.
like
Very
to
enjoyable profession. It's more complicated nowadays, I'll tell you that.
So, but in if you dial back to when you were banking, what was the core function of a banker? What does it mean to be a good bank, and what does it mean to be a bad bank?
Well, basically, you want to take in the deposits and you're paying a certain amount of money on that. And then you want to put the money out through your loan departments at a higher amount. But there's a lot of skill to it because you don't want to take in bad loans. So, there's a lot of analysis that goes on. I'll tell you a funny story. When I got into banking, they had just come out with a new thing called an ATM. And my board of directors thought the ATM was going to replace all the tellers. They thought this is great. Technology, it's going to replace all the tellers. We'll save on payroll. I told them it'll never happen. But it is a great tool. When you need some money at night, certainly an ATM is very helpful.
Now ATMs are going out of date.
Are
Yeah.
they, yeah, I guess like physical branches are almost going out of date too.
Yeah, as you know, I mean, the whole world's going electronic now. ACHs, wires, Zelle, business Zelle, electronic payments are kind of the future, and cash is still important, but it certainly is less and less a part of most businesses' day-to-day life anymore.
Kind of a mixed blessing, though, because that also opens the door to wire fraud and hacking and all that stuff. And there's some good and bad with that, I guess.
Yeah, no question about it. Certainly banks have a lot of focus on cybersecurity, professional services like Ross Title. It's a big piece of what you do day in and day out. And the fraudsters are getting better and better. They're spending as much time as we're spending trying to prevent it, trying to figure out how to get around the system. And so it's a big risk in the industry. It's a big risk for businesses of all sizes. So continuing to find ways to be smarter than the bad guys and protect your business is important. And the statute of limitations for most businesses is less than it is for consumers. So you have to keep a good eye on it. You have to keep your pulse on your bank account.
So,
Artificial intelligence on top of that, and you wonder, wow, where's this all going?
yeah, no kidding.
Yeah.
Well, Mike, you are an owner and general manager of a real estate brokerage, basically 2 billion in sales every single year. You have, over 500 agents. My office, we're doing, 100 or more closings a month. Tons of transactions between the two firms, just an outrageous amount. We're sending, 10, $20 million in a day back and forth through wires, checks. Talk to me. What is the risk? How do you manage as a banker? How do you manage clients like us? And because it's not just the dollars and cents. It's really not that. It's how you get it from one part to the next, how you service that
Mhm.
customer.
Yeah, I'd say no doubt about it. Knowing your clients, knowing your banker is important because you have to be able to spot transactions that seem fishy, that seem out of whack.
Yeah.
If you reached out or someone we thought was you reached out and said, we need to do a wire to a country that you've never done a wire before, that's probably a red flag. But we know your normal activity. We know what to expect out of a title company's normal activity. But it goes so far beyond that. It's how do you build the right controls on the front end? How do you set up your online banking so that you have dual control, that you set the proper limits so God forbid somebody was to get access to your account, that you're able to cap, the damage that is done without extra levels of approval. It's about calling clients back, making sure that, hey, we're confirming this wire, but also education. I think 95% or more of fraud is human error. It's people in a
Oh, God, yeah.
rush.
Yeah.
It's somebody clicking the wrong link. It's someone that
Yeah.
was in a rush to get a closing, did not make a phone call to confirm where the wire was going and confirm those wire instructions. They just took what they saw in an email. And that's still where we see the most fraud is check fraud. And then with wires, it's somebody's email account getting hacked, somebody trading out wire instructions and replacing real wire instructions with fraudulent wire instructions.
Yeah.
And then it just takes one. These fraudsters are sending out thousands a day, and it's just that one person that's in a rush, that it could be 100,000, it could be a couple $1 million, but think how far that money goes in a third world country. It's years worth
Massive.
of an income.
So if you're a consumer, how do you evaluate a business in their banking relationship? How do you evaluate your own banking relationship? What do you look for? Because that's a question that I ask myself. How does the consumer determine a good title company versus a bad title company, or a good law firm and a bad law firm? What are some of the things you look at?
Yeah, I mean, certainly every industry has best practices. I think in your world, there's Alta best practices, which includes things like positive pay, wire process instructions, things of that
Yeah.
nature. Where we see a lot more risk is in on those industries where maybe they're less regulated or have less industry advocacy around this. We see a lot with contractors, with trades, where people are just moving quickly, or folks that are still using maybe an AOL email address, something where it's easy for the fraudsters to get into. I'm sure you get some of those emails all the time from
Yeah.
clients,
Yeah.
and it's probably 100 times easier to hack into an account like that than a good core business account that has security
Yeah.
features in place. But it really goes down to a partnership and talking through the setup of your online banking, because most people, they just want their login credentials, they just want their bank to give them access, but they don't spend any time talking through, how do I set up this account? How do I put blocks in place on certain accounts that are like money market accounts or accounts that may maintain a big balance, but you don't want anybody to ever have access to. And we remind people all the time, if you've got a check that's on the street, that check has your account number, it has your routing number on it, it's got your address on it, it's
Yeah.
got your signature on it,
Name of the account.
name of the
Yeah.
account, where you bank, and it doesn't take that smart of a fraudster to come in there and figure out a way to use your information by either printing a fake check. Anybody can go to Office Depot, get some check stock, and put your information on it and hope it works. So, you cannot be too careful, but you got to keep an eye on it. You got to log into your account daily, reconcile, make sure if there is an issue that you're addressing it quickly so you don't get past the statute of limitations and then, unfortunately be in a loss situation.
Yeah. So when I look at checks, when we do check writing, you mentioned positive pay. So positive pay is a feature that Cogent Bank offers. I think anyone who has access to it should try and use it. But it verifies that the check that I wrote and sent to someone and that they're trying to cash matches my system.
Mm-hmm.
Is there what integrations do you need to be able to use something like positive pay?
So positive pay is available to virtually every business. There are ways to make it more efficient. You write a lot of checks.
Yeah.
So
Some of ours is automated.
right. So some of yours is automated depending on the software, where you can extract a file out of your accounting software and upload it to the bank. That's what bigger businesses typically do where they have bigger volume.
Yeah.
But you can put in, if you only write a small amount of checks, you can put in one check at a time manually. That's not efficient for bigger companies, but with most softwares, QuickBooks, depending on QuickBooks is the big software for the average small business, but every industry has their own software that can extract files and upload it to the
So if
bank.
you're using QuickBooks, and Mike, we'll use you as our guinea pig. If you're using QuickBooks and you're writing checks, you can have QuickBooks kind of incorporate with positive pay with your banking relationship. And if you send a check, it needs to match what it said on QuickBooks, who the
Yeah.
payee was, the amount, the dates, like What are, is that all it looks at?
Yeah, so there's payee positive pay, which is the most robust. That's going to look at your payee name. It's going to look at the dollar amount. It's going to look at the date. It's going to
Okay.
look at the check number. So if there's a check that's out of sequence or seems really off,
It'll
it's
just flag it.
exactly.
Okay.
And that's what's called an exception. And that's the times when the bank is going to be either reaching out to you or you're going to be logging in your online banking to approve or decline an exception.
Yep.
And so it's a great tool to make sure a check's not getting to the wrong spot. And I know you use it every day.
Every single day. And I was actually going to log in. I'm not going to show everybody our banking, but I was going to see if I have any exceptions that we needed to approve. So it's a really wonderful tool, but it's not everything.
Nope.
Just like everything else in this world, that's just the starting point. So you have this wonderful backstop, this little safety net, but there are so many other safety nets that we need to look at. And so what we've learned is we use positive pay. Every check that we send out that gets deposited runs through this system. It checks it. We probably pull up, I don't know, half a dozen exceptions every single day beyond just the automated ones. And it looks like I don't have any exceptions to show people. But then it's some stuff still slips through,
Yep.
right? Things still pop up of like, wait, what is this? And we've been the victim of check washing and check fraud over the last couple of years. I don't know if there's any way to truly avoid it completely, because what happens is someone gets that check, it's sitting in a mailbox, it's sitting at a property manager office on a desk,
Yep.
and someone grabs it and they change who the payee is, they might change the amount, and then they'll try and deposit that, right?
Yep.
So we've actually put in some more manual process on top of things like positive pay, and we know we're not going to send a check without verifying that the person's physically there. That's kind of the big thing. We don't want to send it to someone's mailbox and they're in Wisconsin.
You have a lot of seasonal clients.
Yeah.
They may go to the wrong
Yeah.
seasonal address.
And we've made that mistake before. And so once we caught that mistake, we said, all right, we're not doing that anymore. We're going to do FedEx. We're going to overnight. We're going to track everything. And that way we know where that check is. And that way we're just kind of have safety net on top of safety net.
Yeah.
What are some of the other tools that, so I didn't realize positive pay is something that pretty much any business could use.
Yeah. Yeah.
And
Absolutely.
there's a charge to it. It's an extra service, but it's a service that I think is more than worth it.
Absolutely. It's not expensive. And if it saves
Right.
you one fraud,
Oh,
it
God.
pays for itself 10 times over. And in addition, it saves you headache.
Yeah.
If you have fraud on an account, you have to open up an all new account. You have to transition all of your bills to a new account. It's an absolute nightmare.
It's a nightmare. So I think, if you're operating a business and you're worried about check fraud, you're worried about where you're sending money, obviously you need to be manually fixing things like knowing where you're sending it, knowing how much, daily reconciliation,
Yeah.
like you mentioned. But something like positive pay, that just brings you to another level.
It does.
So Mike, you're our guinea pig. I think you need to look at positive pay. You and I have talked about that before. You got to have this system where every morning
I think it makes sense. I'll give you a true story. In the last 6 months, my personal checking account was whitewashed. And I thought I was being very careful. I had paid a bill and hand delivered it to the Goodlet post office, put it in myself in the slot. And within 24 hours, a check had been whitewashed, changed, and my bank caught it before I knew about it. But here's a case where I was being careful.
So in that scenario, Mike, if you had something like positive pay set up, you'd write the check. It wouldn't stop you from writing the check, and then you'd send it to the person. You'd drop it off. They would try and deposit. They would try to deposit that check, and that morning you would get basically an alert to verify whether that check is good to pay.
Yep.
Right?
And you would call the client or who you were making the check to and say, hey, did you deposit this check or did it get in the hands of someone else? And if they said, no, this wasn't mine, I didn't receive this check, you would decline the check, it wouldn't clear, and you'd write a new check to who it was supposed to go to.
So it's just one tool that banks have. And one of the reasons that I know about it is because you've taught me.
Yeah.
And to me, that is the power of having a good banker, a good relationship, is someone that takes the time to educate you and kind of put you in the right position. Because if you're just sitting out there writing checks, doing your business, and you don't realize this risk, you don't
Yeah.
realize this tool even exists, you're not being efficient. And I've learned a lot. So I took over this business back in 2021 from my dad, and it's been a really steep learning curve.
Yeah.
But one of the things I'm incredibly grateful for is this local relationship that we have. I think it's a difference maker for my business. And I'm not doing that just because you're on the
No.
show, but I honestly believe that it's made us a better company.
Well, I really appreciate that.
Yeah,
I
it's
remember
true.
talking to you via video conference when you were in
I'm still in
Atlanta.
Atlanta. Yeah.
And we knew you were coming down and talking through the business and what it might look like. And I'm super grateful that you believed in us when we were first getting going. And
It
I
was a
think you've
cold
made us
call.
better.
It was
Yeah.
a cold call. So we were with a very large bank. I mean, naturally, in this industry of yours, banks, they grow and then they merge, they get bought out, they kind of get bigger and bigger and bigger.
Mhm.
That just happens over and over and
Yeah.
over again. So we were with a small relationship-based bank. It kept getting bought out and merged, and we were sick and tired of working with these bigger banks. They
Mhm.
just didn't understand our business and what we needed to be successful. So Chris at your office actually called me just randomly.
Yeah.
I was in the middle of
I think she worked
interviewing.
with your dad at one point
Yeah,
many years ago.
and she just randomly called, and I'm like, I assumed, I don't know if you know this, I thought that it was someone I had called. I thought I had called
Yeah.
her and just was curious, and I don't think that was the case. I think
No.
she just randomly picked up the phone. So that was really kind of a really interesting situation.
It's been a great partnership. And, you asked earlier, what are other areas of fraud? You've seen even recently people that have been logging into Sunbiz and changing the officers on those Sunbiz accounts.
It's
So even
actually
if,
really easy.
yeah, you can do it. I mean, any of us could go into any business and change it, file an amendment or an annual
Yep.
report,
Yeah.
and then the system is locked for 24 hours. Many times you're not even notified. And even if you wrote a check to the right business, they could make themselves the administrators of that business, open a bank account in that real business name, deposit your check and move the money. So there is honestly an unlimited number of ways that the fraudsters are getting in there. And so I think it's nothing more than just an attention to detail.
Yeah.
Entrepreneurs like
Yeah.
to go, go, go. They like to sell, sell, sell and grow their business. But having a true finance team or really being engaged in your banking is important.
Yeah, I think it's important. All right, can I ask you some questions about commercial banking and real estate and kind of how you evaluate risk?
Sure.
All right, so Mike, in our business, you and I, we evaluate risk every day, right? We do that in making decisions, but I think a banker does it in sense of, is this a good deal or not? Mike, you and I don't do that very often. We're not evaluating whether something is a good deal or not a good deal. Maybe some of your real estate agents are doing that in a way. What do you look at when you think of a good real estate
Yeah.
deal?
So I guess to start it off, it's important to understand how banks look at real estate or commercial loans in general. So residential loans, most of them, maybe not portfolio mortgages, but most conventional loans are originated, sold, packaged to Fannie, Freddie,
Yeah.
FHA,
But
sold off
most
as bonds.
residential deals.
Right.
Okay.
And that risk is now off the bank's balance sheet. Commercial
So you
loans.
do the loan and you underwrite it, you follow all the Fannie Mae, Freddie Mac guidelines, and then after it closes, you're basically selling it over to Fannie
Correct.
Mae, Freddie
And
Mac.
there's institutional buyers that buy these bonds
Yeah.
of packaged mortgages. We all remember 2008.
Yeah.
But essentially, that loan, if it goes bad down the road, is not on the bank's balance sheet.
Yeah, because you've sold it.
Correct.
Okay.
There's still some underlying risk there, but that's the big picture.
And that's a very highly regulated, very I don't know, structured real estate loan.
Yeah.
All the banks look at it the same way, all the lenders look at it essentially the same way.
Yeah, it's black and white. There's
Okay.
guidelines. What's the credit score? What's the loan to value?
Yeah.
It's a kind of checkbox process.
So we're gonna kind of put that to the side. Those are the residential
Yeah.
deals. I think the commercial deals, that's your specialty.
Right.
But guide us. The mentality of how you evaluate a deal is still really, really helpful.
Yeah. So typically on the commercial side, banks look for three sources of repayment. That's kind of how we're regulated. That's what we want to focus on to make sure that we're going to get paid back.
Okay.
And it's important to distinguish banks typically have better interest rates for commercial loans than private lenders because we're designed to get paid back every time. We're not private lenders, we're not payday lenders, we're not hard money lenders. You may pay 12 or 15% for private money, but the advantage of a bank is the cost of capital is lower.
So
So
what you mean by that is the private lender is putting into their budget that you're probably not going to pay them back.
correct.
And the bank is not as worried about that.
We want to get paid back every time, and we underwrite hoping that that happens.
Yeah.
Which is why our interest rates are better than if you were to go get some private lender to make a loan on
And
your
probably
project.
a result of that is that you're looking at more straightforward deals.
Correct.
You're not taking major gambles.
Right.
with
We like
something.
more middle of the fairway deals.
Okay.
But generally speaking, we look for three sources of repayment. That's kind of the infrastructure of every credit approval memo,
Okay.
probably in the country for any bank. Always like to look at the primary source of repayment, which is most times going to be ongoing cash flow.
So
If it's a
rental income, maybe.
rental income, if it's a piece of rental real estate, if it's a business or a business line of credit, it's going to be the cash flow of the business.
Okay.
If it's a big multi-tenant commercial property, it's going to be, what is all that cumulative rent less ongoing vacancy or normal vacancy.
So
we kind of back
intended
into-
use of the property or of whatever you're lending on.
Exactly. And in some cases, if it's a spec home or if it's a short term, it could be a sale of an asset, sale of a property. But typically, that's the primary source of repayment.
Okay.
Secondary is typically the principal support. So if for whatever reason there was a shortfall of the primary source of cash flow, what's the ability of the owner of that business or that property to cover a note for a period of time? We don't expect that they can cover it forever. Obviously, that would be nice, but do they have a little bit of wherewithal to jump in and make that note whole or pay the monthly payments if they had to? And looking at those contingent liabilities.
So already we're almost opposite of what a traditional residential deal would be.
Exactly.
In residential, your primary would be the borrower.
Personal.
Personal. They're using this personally, they're going to pay it back personally. And then secondarily, you might look at some of the other income. Okay, all right. So we've got your primary source, where the money is coming from within the business or the property. Secondary would be who's signing a personal guarantee.
Right.
Who's going to write the check if that doesn't work? What's the third?
Third would be the collateral situation.
Okay.
So in
What's it
most
worth?
cases, exactly, what's your piece of real estate worth? Not just today, but what could it be worth in a liquidation situation? What is it worth, with a 20% market correction? And that's real
not
estate.
a real thing, is it? No, it doesn't happen.
I don't know. We all remember those days, don't we?
Yeah,
Hopefully
no
we don't
kidding.
get back there again.
No kidding. No kidding. All right, so that makes sense. Mike,
Yeah.
does that add up to you?
Yep.
2
Makes sense.
makes sense to him. All right, so you're going to look at where the money's coming so you can get paid back. And
Yep.
how do you look at that stuff? What matters more? Because a lot of my
Mhm.
clients, they are approached with maybe doing seller financing,
Yeah.
or they're evaluating whether they want financing themselves.
Mhm.
It doesn't, what's interesting about commercial is that there is no box. There's no
No.
like defined plan.
Yeah.
It's a lot more. So how do you learn to do that?
It just comes with time, making decisions, making bad decisions, making good decisions,
Yeah.
kind of learning what the pitfalls are. Every deal is so different. That's why I love the commercial side.
Sure,
Every business is different. Their management strength is different. Their competitors, competitive landscape is different. The trends in their industries is different. And so there's so many factors that go into just that primary source of repayment. And, it's every deal is unique from that standpoint. So there is no, I'd say, one way to slice it. We have, I'd say, generic calculations to
Yeah.
determine cash flow, like debt service coverage ratios that I'm sure you see in all the loan documents for the
Totally.
commercial loans that you close, and, tangible net worth and leverage covenants. And so there are typically a few more covenants in a commercial loan than there would be in a residential loan. But it's all designed to give the bank some warning signals if that primary source of cash flow is starting to deteriorate.
Gives you some leverage.
Exactly.
And would you say, I mean, obviously it sounds like some banks are going to be better in certain niches than others.
Yeah, so, my take on banking is there's bigger banks, there's smaller banks, and the world needs both.
Yeah.
The advantage I think for a small business to have a small bank is you're going to get that time and investment and energy into, being your partner and talking through deals, talking through potential acquisitions or sales and what that impact may be. Whereas some of the bigger banks, they've got a more centralized model, more of a centralized underwriting. And to your point earlier, a commercial deal doesn't fit in a checkbox. It's
Yeah.
not black and white.
Yeah.
So it's hard to look at it in a centralized black and white model. And so that's why I think it's important to have that local underwriting, because Naples, Florida is very different than Fort Myers, and Fort Myers is very different than Atlanta, Georgia. And so having that local decision and understanding of each market is
Yeah.
important.
So do you think that there's a huge advantage of lending in your hometown, right?
Absolutely.
Because you understand that hometown and you can
Mhm.
kind of evaluate that risk better than a bank who might be out of town or not familiar with the market.
Absolutely. I mean, just think about your knowledge of the local real estate
Yeah,
market.
yeah. Makes
This
sense.
neighborhood is probably a little more marketable than the next one, or that this neighborhood may have a big special assessment coming up and this one doesn't.
Yeah.
It's the same thing on the commercial side. We know that well-located properties, we know which collateral is probably worth a little bit more, but you know all the intangibles too. You know someone who's maybe been in town for a long time and has certain relationships and a good reputation, or hasn't burned their partners in the past. You have a
Yeah.
lot of that underlying
Yeah.
knowledge.
Yeah. Yeah, I saw you actually turn down a deal in Colorado recently, and it wasn't because the deal was a bad deal, it's because you don't understand the market.
Right.
You can't truly evaluate that risk appropriately.
Exactly.
So when I'm approached with the idea of doing seller financing, I always try and remind the seller to have that same mentality.
Mhm.
Where's the money coming from? What are they trying? Why is the buyer asking you for the money as opposed to a bank? And how much are they putting down? What's their credit? What kind of job do they have? Like, one might be really great, and you're like, oh, this is awesome. And then the credit could be terrible. And then, the reason why they need the
Yeah.
money could be another terrible reason. Or maybe, and a lot of times this is a good thing, is the traditional banking model can't help this particular person. You can see it, you can feel it, it looks right, but Fannie Mae, Freddie Mac guidelines failed them.
Right.
And so this is a good opportunity for a seller to help out and make a little bit of money on it. I love that. All right, so now so we've looked at what makes a good bank, how a banker thinks about doing deals and kind of making deals happen, making closings or lending happen. What about in today's market? You do have this, hopefully, a declining interest rate market. Maybe it won't be the case.
Title companies want that.
Yeah, I think real estate agents and title companies, Mike, you want a declining?
Mike wants a lower interest rate.
I think he would like a lower interest rate. So
Interest rates would be very helpful.
so how do interest rates affect borrowing strategies with the bank as well as with a borrower?
Yeah, so obviously as a bank, we're a cost plus business, as Mike mentioned earlier on. We pay depositors X and we lend it out at Y. We typically are fine in a fairly consistent interest rate environment, whether rates go up or down. As long as they don't go up or down too quickly, we can manage that interest rate risk.
And that's why the last 24 months has been kind of brutal.
Been brutal for a lot of banks. You've seen a
Yeah.
lot of banks that have gotten caught in that interest rate risk management trap. But ultimately, when rates are abnormally low, like they were a few years ago, we were underwriting and stressing those rates at more of a normalized level, knowing that they were going to go up. So if maybe the real loan was at 4%, we're still underwriting it at 7, 8% to make sure if there is an adjustment, the property can absorb that. But where we are today, we don't know if rates are going up or they're going down.
Who
Seems like
knows?
they may be going down based on the most recent commentary, but we don't really know.
Interesting.
Yeah.
Wow. What are banks the most interested in funding right now?
So I'd say
Or
on the
separately,
commercial side,
yeah, let's do commercial. What do they like and what do you not like right now?
Yeah, I'd say most small banks like good borrowers, and we try not to draw lines in the sand. There's obviously industries that are tougher to finance
Yeah,
typically.
yeah,
Hospitality, hotels, restaurants sometimes are a little more difficult because there's just a higher turnover rate in those industries. Investment real estate, where there's maybe no relationship component, it's just purely transactional or non-recourse, is typically tough for a smaller bank. But for the most part, small banks like just good operators, whether it's a good real estate operator, whether it's a good business operator. And that's kind of what we focus on because we're really here to be part of the community, to facilitate commerce in the community. But I will say, during times of economic uncertainty and a little more turbulence, we have to be a little more thoughtful about the stressing of that underwriting.
yeah,
Because, it's usually not the deals you did 2 or 3 years ago that get you in trouble because those have equity in them and,
yeah.
they're stabilized. It's the deals at the very end of kind of a good
Of a
run
good
that
run.
that
Okay.
deteriorate the quickest.
Yeah.
Think
So you kind
about
of have to be conservative depending on where you are in the market,
yeah.
because you don't know how much more room you have. That's a little tough to predict.
It is, but I would say that, you use the word conservative. I just think of it as good underwriting. The way I look at it and the way I think our bank looks at it is, would you lend this person your own money?
Hmm.
And back before '08, anybody was getting a loan. If you had a heartbeat and maybe a social security number, you got a loan. And that wasn't the right way to do it either. Underwriting really hasn't changed in 100 years. A good credit analysis is a good credit analysis, and that's kind of all there is to it. But I will say, banks now understand that. The regulators have made sure of that. But that whole higher risk level of lending has been replaced with private lenders. You talked about seller financing. There's a whole other industry out there than there was in '08 where people can get access
Okay.
to money through
Yep.
non-bank sources.
Yep. All right. Now let's talk to the particular audience, the real estate agent, and how they serve their client, how you could help
Mhm.
serve them and their
Yeah.
client. What can you give them to think about?
Yeah, I would say,
And I'm
start.
totally putting you on the spot,
No
so
problem. I love it. I love
that's what
it.
I'm good at.
I'd say communicate early and often, first and foremost. I can't tell you how many times people get something under contract and then they run to the bank and they're scrambling. And they may not think about all these things we just talked about behind the scenes. Maybe it's an out of market property. Maybe there's some title issue. There's
Yeah.
something that causes maybe a delay. So you gotta, start that process early. If it's residential, get a pre-qualification letter. Work through the bank if it's a portfolio mortgage. In Naples, we
Yeah.
have a lot of non-conforming loans that are $2-3 million, but they're not able to be sold to Fannie or
They're
Freddie.
too big. Yeah.
And you've got to work with that bank ahead of time because the closing might take an extra week or two to make sure you get a head start on that. Number two, I'd say get organized. It's when the clock's ticking, you don't have a lot of time to get your tax returns in order, to get your personal financial statement in order, to get your W-2 and pay stubs in order. And so sometimes we see in a 30-day contract that could kill 14 days just
Yeah.
trying to get people to get us that information. Whereas if you're in the market, get all of that saved in a PDF, get that bank already working on it ahead of time so you know exactly what you can afford and be able to close quickly, even if you can afford it.
Yep.
So I'd say those are the two biggest things as it relates to the front end of a situation. But I'd also say get the right partners involved. I mean, you and your team do a fantastic job managing through hundreds of files and managing surveys, and I'm sure there's title issues that pop up all the time
On
and some
every
of those
deal.
concerns.
Yep. Yeah.
So it's about having that network of professionals that are going to be involved in the closing process. And
So we've talked about that in prior videos. If you're going to have referrals, you want that referring partner to kind of match your business.
mhm.
And, I think our businesses correlate
Yeah,
very well together because we're hyper local. We serve our community and we have that kind of boutique feel to it.
Yep.
Mike, I think your business is the same way, hyper local, boutique feel, just trying to do everything we can for our community and our customer. You want to make sure that your bank matches that.
Absolutely.
I find it very hard to refer people to someone that you're not going to run into at the grocery store.
Yep.
that's not going to care about what they did that day to a particular customer or failed to do for that customer. So
Yeah.
to that point, what's one thing Cogent is not good at as a bank?
What's one thing we're not good at? I'll
Okay,
have
you
to
have to
think
think
about
about
that.
that.
Yeah, I have to think
So
about that.
Cogent, how big are you at this point?
Yeah, so Cogent's 2.1 billion as of
Congratulations.
this week, which puts us, I'd call it at a large community bank
Large community
category.
bank category. So what's next for Cogent Bank as it continues to grow?
Yeah, I'd say we want to continue growing throughout Florida. Our biggest thing is we want to fill the need in the state of Florida of that boutique bank.
Yeah.
And try to replicate what we're doing here in some of our other markets and some new markets. So we recently got FDIC approval in
Nice.
Bradenton.
Okay.
We want to continue to open offices in Bradenton, hopefully Sarasota,
Perfect.
Panhandle, East Coast. But for us, it's all about the people, you know?
Yeah.
So I guess going back to what we're not good at, I guess this is more of a challenge, is continuing to find bankers that have that same culture, you know, and you kind of reach a capacity where it's hard to take on more and more until you have some of those great employees. And
That's
I know
a
you
good
feel it and
cover.
everybody feel it. Yeah.
Yeah, I think that's a struggle I have with my
Yeah.
business. As much as people would love us to have an office on Marco or in Fort Myers, we're not there. You know, we have such a level that we hold ourselves to. It's hard to grow at a pace that people
Yeah.
want while maintaining those standards.
Exactly.
And I think the big banks, they're able to just kind of say, well, that's not our standard.
Right.
I personally won't work with a big bank because I can't just talk to somebody.
Yeah.
They don't understand my business. It just, and honestly, when I run into a law firm or a title company that works with one of the big banks, I can't trust them because I know what it's like to have the big bank versus the small local. They can't offer the service. It's not possible.
Well, that's why your clients are always coming back to you. You know, I know we shared a client recently, and I think they had been working with the firm for 20 plus years.
Yeah.
And had done probably dozens of transactions with you. And there's a trust factor there when you work with people that are local and you can talk to. And most importantly, the conflict and problem resolution. You know, there's problems on every deal. It may not be, you know, a borrower or a client induced problem. It could be title, it could be insurance, it could be flood. You know, and it's about having the folks that aren't going to sleep at night to try to help you figure out that problem.
All right. So what about you personally? What's next for you? What are you focused on? What's your main job over at Cogent right now?
My main job is really helping Christian to be satisfied with his banking relationship.
See, I think you're getting too big for me.
No, honestly, the great thing about our company is we're a third owned by employees. So we're just small business owners, just like you guys. You know, some days I'm the custodian, some days I'm the lunch guy, some days I'm the banker, but we do it all. And there's no egos at our company. It's just a fun place to be. And we're all here because we didn't want to do the big bank thing anymore. So we're going to cherish every moment of it. And we'll grow as the right people become available. But if they're not available, then we're just going to keep taking care of our existing customers and have fun doing it.
Mike, you have any questions for Brandon? You want to sign up now or later or?
Yeah, I was thinking the one thing that our three businesses have in common, whether it be banking, title company, or a real estate company, all three of us rely on consumer trust. And that's crucial. And really, they're not going to put money in a bank or, attempt to work with a bank if they don't trust that bank. They trust that you guys are good at what you do. Same with the title company. The reason why they turn to Christian Ross, they like the procedures that are in place. They feel safe. They know they're going to get good advice. And the same with the real estate company. You know, buyers and sellers are not going to usually work with someone they can't stand. They want to work with someone they trust that's going to be able to perform. So there are similarities, and certainly the three industries are tied very closely together. I love the idea of a local bank because there's nothing more frustrating than dealing with a national bank where you call in and you're lucky to get a person. So it's this is still a people business, you know.
It's a people business, and we're still a small town. You know, it's still a relationship town, but you're exactly right. You know, nobody wants to call a 1-800 number. my wife gets mad at me every time I, call one of the big companies, AT&T or whoever, and I'm in a call tree and I can't talk to someone and I get frustrated. But, Christian and I were texting this morning, it's about a personal relationship. And our business, Mike, as bankers got a real bad rap back in the Great Recession. And COVID actually helped us recover from that reputation,
Oh, really?
I think, because we went back, the small banks kind of rolled up their sleeves and worked hard on PPP loans for our clients, and they kind of got hung up at the bigger banks. And so we kind of had an opportunity to rebuild some of our reputation.
Yeah.
But there's always tough conversations that have to be had. Sometimes when you turn someone down for a loan, it may not be for bad reasons. It may just not be a good fit for the bank.
Bad timing.
But they take it personally. It's in their eyes, it's often they feel like, hey, you don't think I'll pay you back. And that's not the case, so
well, maybe they won't.
Exactly. But that's where it's about talking it through and having someone that can explain it to you, not just get a letter in the mail.
Yeah, that makes a lot of sense. So for those that want to reach out to Brandon, what's the easiest way to do that?
Yeah, you can give me a call.
There he is. Look at him.
There I am.
Look, you even have your email on the website.
Absolutely.
Nice.
But would love to help out. I love working with this team. It's a great group. You guys run a fantastic practice. We see all the transactions day in and day out, and your clients love you. And it's a pleasure. I appreciate you believing in us.
And you're growing your mortgage business too on the residential side. So I want to make sure I plug that. That's a big priority of yours, right?
It is. We've made a big investment in mortgage. We'd love to find a few more good mortgage officers here in Southwest Florida. So if anybody's listening, come on over to Cogent. Give me a call.
Give Brandon a call. He's a great person to work with. That's for sure.
I have a question. What is the closest Cogent Bank location to our corporate office here?
You're about a 3-wood away. I'm down at Mercado.
I can't heard a 3-wood that far. Holy smokes.
Maybe a driver, but we're at Mercado, right behind Walgreens in the big 8-story building there. We've got the whole first floor, so swing by. We've got some cold brew on tap. We'd love to have you.
Do you really?
Yeah. Yeah. But we do have a Fort Myers office as well, right near Sun Harvest Citrus, for those familiar with that area, near 6 Mile and Daniels, 6 Mile and Metro. So we'd love to see anybody pop by any of our offices.
Yeah, so their office here in Naples, Mike, is gorgeous. It's awesome. I'm a little jealous. So right on the first floor, right down in front of Mercado. So
okay,
cool.
good.
Brandon, thanks, man. Appreciate it.
Thank you so much for having me.
Mike,
Keep up the good work.
everybody, thank you.
Pleasure, Mike.
Reach out to Brandon if you need a banker. Bye, guys.